Alright guys, welcome back to another video, and today I'm going to be going over an SMT. And SMT is a divergence between two correlating assets, which I use ES and NQ. So this confluence is what gives me the difference between losing trades and winning trades. So without further ado, let's just hop right into it. Alrighty, so we have ES right here and we have NQ. What a SMT is maybe ES takes a high or a low and NQ doesn't take that high or low, or vice versa. So right here we have this sell side liquidity. ES is obviously very bullish, while ES is trying to take some sort of liquidity for manipulation. NQ then proceeds to run up without taking this lower sell side level, while ES takes this sell side level. This would then create a SMT. This would be a bearish SMT right here. This would be a bearish SMT, and then we would have internal model, and this gives us a confluence that we possibly want to go higher with this SMT. Alrighty guys, this is now a bearish example. We have ES chart right here and we have NQ chart right here. So ES runs higher, creates higher highs and lower lows. ES then takes this sort of a buy side liquidity, internal buy side for manipulation leg, while NQ does not seem to take it. It just creates a high, then starts chopping lower to the drawn liquidity, which is this sell side right here. This would then become a bearish SMT right over here, and this would be a confluence in which price then wants to go lower, and this would give a bearish order flow. Alrighty, now that you have two ideas of what a bullish and bearish SMT are and how SMTs are actually created because of the divergence between two correlating assets, I'm going to go into a SMT that I actually use for confluence to enter into a trade that actually won me some money. Alrighty, so we have a trade out here. I actually didn't use an SMT. ES and NQ took this sell side level while we were in a 15 or 30 minute PD array. Right here we inverse this first presented. I entered, and NQ was the only asset that took this high right here. NQ was the only asset that took this buy side level. ES managed to just completely run off to these sell side levels. So this made me put my TP at this high and not try to target these buy side levels. So this SMT saved me from taking in more profit than losing and going to break even. As you can see right here, this is the ES chart and this is the NQ chart. This is the high that NQ managed to take. ES did not take it. This then created an SMT, a bearish SMT, then running to these sell side levels right here. And ES did not manage to take this low. NQ managed to take right here. So this would be a bullish SMT, and look, immediately after NQ took this low, after NQ took this sell side level, price began to go higher to these drawn liquidity, all this level, immediately after creating this SMT. An SMT is a major confluence that you need to implement into your trading because this is going to give you a little pre-market on what the order flow is going to be.